Welcome back to Investing and Trading Live, sponsored by Online Trading Academy. My name is Josh Lilquist, and we were covering a lot of topics on that last segment on why trading and investing can be complicated, but the only reason it's complicated is because you just haven't been taught the skills and techniques. We talk about anything in our everyday life, and I was given the example on how I'm going to tell my buddies that want to get into a fantasy football league. I'm going to tell them it's too hard to get in the market to play fantasy football. You can't pick the right running backs, the right quarterbacks, the right receivers. I'm going to tell them, you know what? Give me your money, give me your entry fee, and I get half of your winnings. And that's really what brokers and advisors are doing, is they're conditioning people to give them their money, take fees off of that, and really no matter which way the market goes, the broker is making money. So we're seeing a lot of people, especially lately, it's been great, come to the academy because they want to have more choices at retirement, and they want to be able to have their own destiny picked out for themselves, not somebody else dictate their destiny. And it's about doing the right decisions, having the right choices in those retirement accounts. So we had a lot of people texting in for the investing class that we do here locally to show these techniques and the concepts on retirement accounts, 401ks, IRAs, how to profit in down markets. The concept and the strategy is called shorting. So we're going to show you how that's done in the market in these investing classes here local. It's a physical place to go. We have a couple different classrooms, many computers in these, so when you're part of the academy, you have access to the community as well. Text the word investing to the number 210 for 2 seats for this investing class right here at the academy. So in the last segment, we got into, you lose time when you do nothing. People have savings, which is great, but they let it sit there and idle, which you're losing to inflation. And then the biggest thing is that's why people are poor, is they're passing over opportunities regularly. Now, that being said, sometimes a lot of traders and investors get in positions at the wrong time, Al. And for example, we had we had a good friend stopped in recently that was talking about, hey, what do you think about NVIDIA? Is it time to go buy NVIDIA? I mean, it's been in the news. And I said, okay, well, let's go look at a chart and see what the opportunity is. And for those of you that are watching the YouTube stream live, by the way, you can go to the YouTube stream at any time and check out the videos on the podcast here. Just type in Josh Lilquist. But so NVIDIA, over the past, from the lows of October of 2022, NVIDIA is actually up already since then 311%. Mm-hmm. And this individual was like, hey, should we go buy NVIDIA now? And I said, well, NVIDIA is up 311% already. Isn't it kind of late to get into NVIDIA? But it's doing so good. So I said, okay, great. Well, that's a good, it could go higher, but why not being able to buy NVIDIA at a discount? And I gave him this example so he could understand it as far as how we buy and sell everything in our everyday life. I said, okay, would you ever go to the grocery store and say, oh, I need a gallon of milk, and I don't know what a gallon of milk costs, but let's just say it's $4. You wouldn't say, I'm going to wait till that gallon of milk goes to $7 and then I'll buy 2 of them. You would never do that in your everyday life. But that's what this example with NVIDIA is. It's buying after price is already high. So then you're hoping to sell it higher. Why not learn the skills and techniques to buy, actually really realistically buy low and sell high? Same example with Apple. Apple is also at all-time highs. And Apple from the same time frame, from January of 2023 is up 50% in 6 months. So why are so many investors buying so high with the hope to sell higher in their retirement account? So I want you to break that down, Al.
Yeah, it basically is that fear of missing out. When you see something go up like that, and I can understand people feeling this way. I missed out on this, but NVIDIA, it's at all-time highs, is probably going to continue to go up. I'm going to miss out if I don't get in. And it might continue to go up. But look at the valuation there. NVIDIA, the PE ratio on NVIDIA is over 200. It's 221, 222. That means that you're paying $222 for every dollar's worth of earnings. We look at more like 15 or 16 as being true value. Now, if you have a PE ratio like that, if you have that kind of high valuation, you have to be doing something spectacular to justify that price and keep it moving. Once something has moved up that high, the chances of it kind of repeating that, it was up 300 and some percent.
311.
The chances of it being up another 300% before it retracts and corrects is really almost not possible. And all those stocks, the Apple, Nvidia, Tesla, Netflix, Amazon, Google, they all went through a big correction back in 2022. They're now coming back out of that. But a lot of that growth for a lot of people that maybe held on or bought during 2022 is just getting back to where they were before.
Yeah.
So their profit is not necessarily 300%.
Correct.
Or if they went down 50% on a stock, it has to be up 100% before they break even. But the tendency for people is to do that. It's fear of missing out. And we see, if you look at all of the major moves up in the markets, we see the equity ownership of the public increase right at the peak, which is the most risky part, actually, of getting into something. And when does equity participation diminish? It's right at the trough, right as something is bottomed out. When they, in fact, I talked to somebody the other day. They had made a really great trade. They were up almost $100,000, and as of now, they're down. They're in negative. It's because they might have gotten one part of the three components of a trade right. There's three components. One is your entry price, one is your exit if you're wrong, and one is your exit if you're right. The two components that people that really hurt people are not knowing when to get out if you're wrong, not knowing when to get out if you're right. But those are all the quality of your protection, which is getting you out if you're wrong early, and the quality of identifying your profit is based on the entry price that you choose. That is really critical, and most people don't know how to do that. They just say, well, this looks like a good company. I'm going to buy some stock in it. It might be a great company, but it might not be the right time to buy. It might not be a good investment at this point. NVIDIA, it may continue to go up for a while, but at some point in time, it's going to pull back. There will be another opportunity. And there will be other companies that maybe are more truly or fairly valued that have the potential to maybe move up 100 or 200 or 300%.
Yeah, and just an example, you mentioned when is the right time. If we have a lot of longtime listeners here in the Minneapolis, St. Paul area, the metro area, and people have been listening for 5, 6, 7 years of our show. And if you remember back from May, we were actually talking about Apple. And you mentioned when is the right time to buy. We had a demand zone, which is basically an opportunity that we have identified odds and probabilities, and that's still valid. So why buy Apple when it's at 186 when you have the opportunity to have more odds in your favor, get a lower price? You just have to wait. So wait for price to get to you, not chasing price. And that's the key in trading investing, is where to get in, as Al was talking about, but also where to get out with the lowest risk, the highest reward, and the highest probability. And that is usually at or near a turn-in price. And it's the law of supply and demand. If you think about it, just to give a visual for people, the law of supply and demand can't be broken. If I have this, for those YouTube viewers right now, I have a pen in my hand. For those that are listening to the radio show on local radio or the podcast, hopefully you can get a visual here. But I have a pen in my hand for you YouTube listeners and viewers. If I throw this pen at Al, which is across the desk of me, and I throw it at an arc, we know the pen is going to go up a little bit, and we also know the pen will eventually drop, which is the law of gravity. That can't be broken. Same thing in the financial markets, which is the law of supply and demand. When there's more demand for something, price has to go up. When there's more supply of something, price has to go down. And that is that can't be broken in the financial markets. That's what we're talking about. That's what we want to identify as the public, as a retail investor or trader, is where institutions might be creating that demand or creating that supply. And that's what we go through in these investing classes. We have these investing classes to illustrate that. It's a live class. It's a physical place. We got a lot of people coming to these classes here. And the great time with summertime is that we have nice air conditioning, and people are like, hey, it feels so good. It's been so hot lately, and people want to cool down in the classes. So we do have the air on for people. But these classes are where we've taught thousands, just like you, are different strategies which are designed to teach you to make smarter investing decisions. So these classes are about 2 hours long. They're during the week. They're also on the weekend. We even have these in the during the evenings as well, so anybody can attend. So text the word investing to the number 210 right now for 2 seats for this class. When you do that, you're going to get a text right back as the final giveaway of the show. Text investing to the number 210. You get a text back with that welcome letter. It'll say, welcome to Investing and Trading Live. It'll have a link that you'll click, and you can pick your own date that works the best for you. Pretty much anybody can attend. Text investing to the number 210. We've talked a lot about JOB, POR, how to maximize your time, but also how to maximize your capital. Let's hear today's OTA tip of the week.
Well, we have a lot of people coming in, Josh, that ask, how can I handle what's happening right now? How can I face the issues that are going on? And I would just say this. Look, successful people spend 5% of their time on the problem and 95% of their time on the solution. So how about you? What are you doing? Remember, your actions are responsible not only for what happened in the past, but also the present and the future. So if you're not happy with what's happened now, if you, in the past or now, and you want the present and the future to be different, you have to take action that is going to be different. Remember, what you do today is going to determine your future. You may now it may seem like this is a good time to concentrate on the solution instead of the problem. So don't concentrate on the problem. Remember, confidence is nothing more than believing in yourself, and believing in yourself is about doing the things you once didn't believe you could do.
I like that. When I teach my kid how to ride a bike a few years back, I said, you know what? Don't focus on what can go wrong. Focus on what can go right. Text investing to the number 210. As always, same time, same place next week. Until then, retire young, my friends.